Pedro, welcome back to F.A.C.E. What's top of mind, buddy?
How's it going? Let's see. Top of mind is the top of the rate cycle, I guess. Um,
Okay.
my constant and continuous focus, and it's just been amazing to watch the consistent readjustment
Yeah.
of of what the expected rate peak is, and it still seems like we're in the process of finding that spot, and
There it
it's
is.
also
There's your visual.
incredible to look back. Yeah, exactly. And incredible to look back and at some of the interviews that we did, even middle to late last year, with some of the more perceivedly hawkish kind of former and current officials. And they were right on the money as far as, how high rates would have to go. And again, we're still discussing how high they might have to go. I went to the University of Chicago booth monetary policy forum last
Yeah.
week on Friday in New York. And that thing is like a mini Jackson Hole. There are like 8 sitting Fed officials in the room, and like every Wall Street chief economist, and the mood was really hawkish. The paper they presented was basically more sort of Fed is behind the curve kind of material, and the tone was very kind of finger pointing ish, in terms of like, there was a whole session on why the Fed miscast inflation. There's sort of a whole mea culpa kind of session, which again leaves the Fed in a defensive position with regards to an inflation picture that they still don't seem to have a hold of.
No, they don't. And not just here, everywhere, globally, right, Pedro? I mean, all these numbers are coming in hot, not just here in the U.S., but everywhere.
That's right. There was one person in the audience who was a German economist, and he said, "You guys are more hawkish than in Germany. This is crazy." So, um, but yeah, the numbers are coming in hot, across
Yeah.
the board. And I think that it's amazing to see just how much the narrative has changed from the start of the year, right? We entered the year with
Yeah.
a sort of seemingly clear picture of where we were. The economy's slowing down, inflation's coming down, and then just 1 month of like ridiculously hot data completely changed everything. And you could see the hesitation in Governor Waller's remarks from yesterday, where he's like, "Well, we keep getting caught off guard that we think everything's peaked and is leveling out, and it doesn't." And so they seem very concerned. And even Raphael Bostic, who's kind of become one of the dovish voices again on the committee, was pretty open to raising rates more than people currently expect. So that seems to be the path that they're on now. But we'll see how far they revise up their.
So what do you think they'll do this month?
I think they're going to
Quarter,
stick.
half?
Yeah, I think they're going to stick to 25. But the very fact that the half a point is back on the table shows you again that they've fallen behind the curve, right? Because they definitely didn't want to step down to then have to resume aggressive hikes. And so I think to definitely go 25. But the key is really how much of a repricing is there in the peak rate, and and how much further did they push out their expectation for when they'll reach the inflation target.
Okay. So anything that you see that we should look for in the ISM? I mean, that's happening today.
I mean, not in the ISM in particular. I don't have any particular expectation for it, but
Okay.
it was notable that the prices paid component of the manufacturing survey was certainly up, and that's the sector that's supposed to be in the sort of mini recession. So, services is key for the Fed, and Chair Powell and others have flagged this new I mean, not new, but newly important super core measure of core services ex housing, and they're paying very close attention to that, and they don't seem to think that there's been a lot of progress made there. And there's a sense that inflation expectations and wage growth expectations are becoming somewhat embedded to a greater extent than Fed officials would like. So it's just really an extreme level of uncertainty about the future path of rates and the ultimate outcomes that we're going to get in this cycle.
Do you make anything out of the extreme inversions that we have here? It's predicted. Everyone's saying it's predicted. 10 of the last 3 recessions, saying that it really isn't, it's more about the central planning than anything else. Do you think it means something?
I find it, yeah, I do. I can't believe that it means nothing. I find it incredible just looking at the chart, just how far back you have to go to get this steep an inversion and this consistent, right? You're just looking
How
back at
far back, buddy? How far back?
it's
So
in
you've
the
looked at,
80s. In the 80s, you have to go back to like the 80s because in the Great Recession, you actually didn't have that big an inversion, but it was predictive, right? And I
so
actually
early
remember
80s, early 80s when
that's
Volcker
right.
was tightening? Okay.
That's right. And I don't think, yeah, and that inversion was steeper than the current one, but this one is, yeah, again, when I remember in 2007 writing stories about how people were again dismissing the yield curve as a predictor of recession. I think the leading economic indicator survey even went so far as to take it out of their leading indicator kind of hodgepodge of subcomponents.
Okay.
And then it turned out to be totally predictive. So I think that this is kind of a recession delayed rather than denied in the sense that basically the longer it's this weird contradiction where the longer the economy stays okay, the more the Fed can brag about a soft landing, but also the more they need to do in order to
Right.
get inflation under control. So it kind of raises the potential cost of a future recession whenever it might come, right?
Right. Because it has to become more draconian.
Exactly. And everything becomes
Okay.
more entrenched and embedded. So again,
What's interesting? We were talking about it this week in F.A.C.E. You look at the dollar and yields are pretty close to where they were in October at the highs. And yet last October when yields were at the high, look how much stronger the dollar was. So we've had a similar move in rates where we're almost here. And the dollar, this little bounce that we've had so far in the Dixie has been, not much. Because when yields were here last time, the dollar was too strong. And now it seems that either the interest rate differential or the higher yields don't mean as much for people to want to be in the dollar as it did last fall. Can you explain that?
I don't know what to make of that actually. I defer to you
But
guys.
isn't it interesting that
It
with
is.
all this tightening that we've had in the last month or so, and where yields were when, last time we were in this area right up here, then the dollar was up here, not down here like it is now.
Yeah, I
So
wonder how much it has to do with what's going on in the rest of the world and sort
I,
of the expectation
yeah,
that the strength in Europe means that they will peak like kind of later than the Fed, even if they stay lower.
and they're more, so if we're hawkish, they're even more hawkish. And
Especially
that's
in
what they're, yeah.
relation to their baseline, right? People thought that the ECB would never be raising rates at all. So the fact that they're doing it in half-point increments consistently and talking about 4% rates is pretty significant.
Have you had any good guests on? I know you do some interviews. Anyone that, we could go to the website and you would recommend us listening to?
Oh,
If we,
absolutely. We would do a weekly, sometimes more like sometimes two per week podcast called Fed Speak on the Market News website. And it's also available on Spotify and Apple, et cetera, with a 5-day delay, but it's behind the
okay.
paywall kind of immediately. And we've had a great string of interviews. We had former Atlanta Fed President Dennis Lockhart. We
Do
had
you
Richard.
host them, Pedro?
I host a lot of them, but my
Okay.
colleagues do as well.
How do you like, which side of the microphone do you like better?
It depends on the interviewer. I like both, but I prefer asking the questions these days, especially given the level of uncertainty. I prefer not to try to have all the answers.
Yeah.
But I really enjoy within the Fed system talking to the research directors. I find it super instructive and informative. They're basically the number 2 officials at the regional Fed banks.
Right.
And so we recently had Andrea Raffo, who's the Minneapolis Fed's research director. I'm going to have next week Ed Notek, who's the Cleveland Fed research director. And the Cleveland Fed is a really interesting bank because Loretta Mester is, kind of a leading hawkish voice, and she's very influential because of her monetary policy experience and expertise. She was research director herself at the Philly Fed before she got this
Yeah.
job. And they have something called the Center for Inflation Research, which is doing really interesting work. And they were founded in 2018 when nobody cared about inflation, and suddenly, they have a Center for Inflation Research, and everybody, it's all the rage. So I'll have him on next week. So a lot of
You
great
pay,
content.
yeah. So really, if you want to know about Fed speak, there are a lot of great analysts out there, but Pedro's actually talking to the inner workings of the Fed. When they're not the headline names, right? But they know what's going on.
Yeah, I mean, sometimes we get the headline names. Like we've had four presidents on over the last. We started the podcast about a year ago, and we had four regional presidents on.
Right.
Board members are a little harder to get. They don't really give interviews, but I'm working on it. But
Four
yeah, we had
presidents. It
Tom
sounds like
Barkin. Go
sounds
ahead.
like the UK, where they have four prime ministers in a year. Anyway, are you paying attention to this reopening in China, Pedro? Do you have any feeling on it? People really think it. They look at it as Chinese stocks had another good day yesterday. They were really the stars in December and January. Do you think this reopening is going to continue to create demand? Uh, do you have a view on China, or that's not your beat at all?
It's not my beat, but I watch it very closely, and I go to bed listening to like Bloomberg Asia.
Okay, yeah,
So
all
I do
right,
pay attention to the story. I actually find it fascinating how much the Fed dismisses it as a factor. I don't know if you remember, but Chair Powell was asked about it in a press conference a couple meetings ago by the Bloomberg reporter, and he's like, "Yeah, I pay attention to it, but doesn't really factor in my outlook." And I think that's kind of a
wow,
kind of a weird view to take on the second largest economy in the world. You've got to think that it's going to have some influence. And I
yeah,
think it does create the potential for there to be, like, I don't know how much underlying strength there actually is in the Chinese economy. It might be a kind of a burst that doesn't lead anywhere, but it might be a
right,
burst that takes place just at the wrong time for the Fed, in the sense that potentially re-energizes energy prices just at the
right,
right time,
yeah,
right?
yeah.
And so
Demand
I think
comes back. Yeah.
yeah, exactly. So even if it's a head fake, it's a head fake that could be, problematic for the Fed.
Well, we have to admit that the bonds are in a bear market, right?
Yeah.
And you could debate whether stocks are in a bear market or not. Maybe they've come out of it, but when you think about this, like China coming in at the worst time, because it's going to make the Fed's job even more difficult, just like the economy hanging in there longer than we thought it would, for the Fed to have to stay higher for longer. There's an expression that anything that could go wrong in a bull market doesn't, and anything that could go wrong in a bear market does.
Yeah.
So this whole China thing you just brought up made me think about this, that, up until 2020, anything that could go wrong didn't. And now it seems like anything that could go wrong, you should kind of count on it. Why don't we wrap it with, I want to see if you're part of a unanimous decision. Okay. We run out of cash in June using extraordinary measures to keep the government open. And but it's all theatrics in Washington. And at the end of the day, they'll raise the debt ceiling. Do you believe that?
I'm glad you brought that up because I mean I'm as uncertain about it as I've ever been. So I mean,
Okay. All right.
chances
So
are
then it's only just you and me, Pedro, because everyone, I asked
really.
this question.
Yeah.
And everyone goes, oh yeah, of course they will. Oh yeah. I mean, the complacency about that it's going to happen, I think is, dangerous.
Yeah, and actually, I think there was the headline speaker at the luncheon at this booth forum that I attended Friday, Dale Singh, former Treasury official. He actually said that complacency is problematic in itself because it is those market forces and that market pressure that leads to the 11th hour breakthrough in the first place. So if markets remain complacent about it, it increases the chances that nothing gets done, which is a little bit frightening. And actually, I think if you talk about a confluence of terrible events for a treasury market that's already seen as fragile
Right.
and fraying at
Yes.
the edges, for it to be hit with something like this, like it could be the thing that, and at a time where the Fed might be hitting 6% interest, on the Fed funds rate and doing QT, could be the straw that breaks the camel's back, even if we don't actually get to a default, even if it's just the ruckus around it.
Yeah, and we could get a downgrade without a default. That's happened
Exactly.
before, and that would
Exactly.
be helpful. Well, let's wrap it on a cheerful note like that. And the political acrimony, it could be a mistake, and they just don't get it done. A self-inflicted wound at the worst time.
Hey, we kind of had an attempted coup, right? So
Yeah, there you go.
inflicted wounds.
I try to forget about that.
I'm a Brazilian American, so I've had attempted
Uh,
coups in both my countries in the recent past. So it's
yeah, boy, well, you had a lot
part
of
of that.
practice. I think at least Brazilians have had a lot of practice with what's starting to happen in America now.
It's it's a fair observation.
Do you see the parallels
Oh, I
and
mean,
certain things?
you could argue, Dale, that I'm here because of hyperinflation that we experienced in Brazil in the 80s, which forced my parents to move here. So,
Yeah,
it's very
yeah,
circular that way.
yeah. I can remember them showing videos of men driving Mercedes and getting out and trying to kill a cattle in the field for food. So they had their Mercedes from before the hyperinflation. They had the things, but they had no food. That they
Yeah,
had to go out into the fields to hunt for
yeah.
dinner. So yeah,
Let's hope it doesn't come to that. But
'cause I'm not a hunter. I like delivery.
yeah, exactly. I'm more of a gatherer myself.
Pedro, really great talking to you again. And thanks for being a watchman for us with what's going on in these times. And I guarantee you, we're the only two people that think that there could be a problem in June with
Uh-oh.
our own debt ceiling. So we're the ultimate contrarians on this one, buddy.
Well, let's hope we're wrong.
I hope we are. I don't think we will be, but I hope we are.
Thank you so
So
much for having me. I appreciate it.
all right, everyone, follow Pedro on Twitter and go to his website and learn
And
about what's going on in the
definitely
Fed.
subscribe to the podcast Fed Speak on Spotify and
Yeah,
Apple.
yeah, that way, you don't have to believe what you're reading on Twitter or people's interpretation. Go right to the horse's mouth like Pedro does. Thank you, buddy.
Thanks again.
Pedro da Costa, everybody. Follow him at P da Costa on Twitter. I hope everyone has a great weekend. Hope you had a good week. Enjoy your weekend, recharge your battery. And most of all, don't just count your pips, count your blessings. Adios, everyone. Enjoy. Thanks, Pedro.
Thank you, guys. Take care.
Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.